Hi everyone, this is Ali Hussein Kasim of Ali Talks Tech, and this week's weekly roundup, we kick off in Nigeria, come to Addis with some African Union news. We head to CNBC with some news about African fintechs. Then we'll cover an interesting global story around business continuity when it comes to your tech platforms across whether it's personal, small business, or major corporations. But first, we are in Nigeria. Sorry, we're not in Nigeria. We are in Africa, across Africa news, where, interestingly, a digital bank in California is set to affect the banking needs of 13 countries in Africa. Startups in 13 of these countries will not be able to bank with this California bank called Mercury Digital. Now you must ask yourself, what the F does an American digital bank have to do with the operations or bank account needs or bank needs of startups in 13 African countries? These countries include Nigeria, Burundi, Cameroon, Central African Republic, DRC, that's Democratic Republic of Congo, Liberia, Mali, Mozambique, Somalia, South Sudan, Sudan itself, and Zimbabwe. So, are you confused? Well, better not be, because Mercury Bank in California is sort of the go-to bank for a lot of startups, not just African startups. But the question is, why are African startups still banking in an American banking institution? There's a problem here. And what is that problem? What we need to address is a couple of things. One, fact, the majority of startups who get funding in Africa bank with a bank in the country where the funding is coming from. Now, here's the thing that should worry us. First, you obviously have a situation where the majority of funding is coming from outside Africa. That's fine. That's okay. Well, not okay, but it is what it is. They're the ones who see value in African startups than investors in Africa. That's a story for another day. The question then arises is, do we not have banks in Africa that can actually hold these funds? So that's not to say these startups do not use local banks, but I think the funding that comes in, the majority of that stays in a foreign bank. Your guess is as good as mine why that continues to be the case. But that talks about the sustainability and the policy and regulatory frameworks across Africa that we need to deal with. So, unfortunately, these startups that are in these 13 African countries will have to quickly find an alternative to Mercury Bank. Let me give them some alternatives of banks that cover most of Africa. And you should be able, as long as you know where the funds are coming from, you can actually verify source of funds and all that. EcoBank, Absa Bank, Equity Bank, KCB Bank, Fidelity Bank, that's in Ghana, UBA Bank, Zenith Bank. The list can go on and on, guys. We have solid African banks that can handle your funds. So let's get over this nonsense of continuing to bank the bulk of our money outside Africa. But even as I say this, I think there is possibly potential risk-related conversations that must be had. This is why my next story is important. The African Union has launched a comprehensive startup model law framework. Why is this important? This is important because this comprehensive startup model can actually be rolled out across Africa, at least across the African Union members, which is really all African countries. The key points of this groundbreaking initiative, key objectives: number one, harmonize approaches to enabling startups and innovation among union member states, address challenges that are hindering startups in Africa, such as complex regulations, limited funding, scarcity of skilled labor, and fragmented markets. Set up a strong foundation for the growth of Africa's startup landscape, projected to expand to USD 10 billion by 2056. I think we'll most probably 10x this by 2056, but that's a good point to start. The key features of this startup framework articulates principles, recommendations, and policy innovations derived from successful models in Africa and globally, provides specific sample clauses to guide African member states in developing or updating their national startup legislative and regulatory frameworks, and aims to unlock the 10 billion that I mentioned earlier in startup funding by 2056. What then is the potential impact of this African Union initiative? We expect this will address gender disproportionality in startup financial flows and inspire a new wave of innovation and growth. Calls for decisive efforts to support startups, particularly those led by women and youth, to pave the way for the Africa we want. Let me expand a little bit on that. African leaders always talk about the youth dividend. Before they talk about the youth bulge. Africa doesn't have a youth dividend yet. Africa only has a youth bulge. So we need to work on the youth bulge to be able to get the dividends out of the youth bulge. This marks the beginning of a interesting but potentially transformative phase that requires momentum behind engagements with regional economic communities, startup associations like the Fintech associations across Africa, regional organizations, and member states that should update and enact these regional frameworks and national laws. This adoption by the African Union is a significant step towards creating an enable environment for startups to thrive and contribute to Africa's economic prosperity. Let's hope this will be a great step in the right direction going forward. In Nigeria, the regulator called the Federal Competition and Consumer Protection Commission has just fined Meta $220 million for privacy violations. So, on a light note, these Nigerian regulators seem to have become super activists. They're just dishing out millions of dollars of fines from against Western big tech and big organizations. Just the other day, they fined $4.5 billion. I think $4.5 billion. They slapped a fine on Binance, and they held two Binance executives for a couple of months until there was a certain agreement. What that agreement, we don't know, is still something in the dark. So the FCCPC has fined Meta because of practices that include appropriating personal data without consent and discriminating against Nigeria's consumers compared to those in other jurisdictions. In a press release, they highlighted, and let me read this, concerns over Meta's dominant market position and its allegedly exploitative privacy policies that did not allow users to control their personal information. In response, a WhatsApp spokesman, WhatsApp is owned by Meta. Meta is a holding company that owns WhatsApp, Facebook, and Instagram. In response, a WhatsApp spokesperson stated that the company disagrees with the fine and plans to appeal the decision. This fine comes shortly after Meta faced similar regulatory challenges in Brazil, where scrutiny of Meta's where it suspended its generative AI tools due to privacy policy objections. The ongoing scrutiny of Meta's practices underscores the increasing global focus on data protection and privacy policies. We go to CNBC headquarters, where last week 5 African fintechs were feted among the top 250 fintech global list for 2024. This includes Kuda, Pampe, Flutterwave, MTN, Momo, and Piggyvest. Congratulations to the fintechs. Now we come to the fiasco that was the CrowdStrike. Last week, many companies across the world were simply totally stranded. So what's this Wall Strike? The recent global outage which affected Microsoft platforms have caused very significant disruptions across various sectors, primarily due to faulty software updates from the cybersecurity firm called CrowdStrike. The incident has particularly impacted banks and payment systems, with notable companies like Lloyds in the UK and Capitec in South Africa reporting issues. Airlines also were tremendously affected. Microsoft identified this problem with virtual machines running Windows clients and Windows servers that had the CrowdStrike Falcon agent installed. The CrowdStrike CEO, George Kurtz, clarified that this was not a security concern or incident, but a defect in a content update, which has since been addressed. So things have basically come back to normal. But the ramifications of this outage extended beyond banking, affecting payroll systems, leading to delays for airlines, including Ryanair and American Airlines. I was also affected, by the way. I was dropping some people at the airport, coming out, the parking system just wasn't working up to scratch, long lines and all that. The billion or even $1 trillion question today is simply this. How do we get to a point where a simple computer software update is affecting global operations across industries? Have we become too dependent on computer systems? What can be done? Last but not least, a friend of mine at Samsung mentioned to me today that the Galaxy Z is about to be launched. I have asked whether I can have a test drive on this Galaxy Z before it goes out for launch. Hopefully, I shall get a test of that in the next couple of days. I'm hoping to share that with all of you. That's it for this week, guys. Looking forward to engaging again next week. Asanteni sana.